right. Thanks for joining again, Megan. It was great to see you in Abilene, Texas a couple of months ago.
Yeah, thanks for having me and thanks for making the trip to Abilene. Not the easiest place to get to, but glad you were able to get eyes on the asset.
So let's just start with what is a data center?
Sure. So I think of a data center as sort of the physical infrastructure which supports our collective creation, consumption, and transmission of data. When you think about really everything that we do, involving the internet, involves some sort of communication between ourselves and various data sources, and that data is stored and lives in data centers. So as we create and consume more data, we need more data centers to house that information. What a data center is not, I think, is just as important as what it is, and what it is not is the actual sort of chips and servers that is on which the data is stored inside the asset. That is all the responsibility of the tenant within the asset, not us as the owner of the hard asset itself, which is really important, we think, because we're not actually taking any technology risk as it relates to these really important sort of critical infrastructure assets. That tech risk is really borne by tenants, and the spend associated with those chips is also borne by tenants.
Great. Cool. So I mean, every day there's a new announcement. Why is the demand for data centers just so big right now?
Yeah, it really just comes down to the creation and consumption of data having really surged. Some of that is driven by artificial intelligence and the data that comes associated with that. But really, it's also just driven by our sort of general internet utilization. There's a stat that 90% of the data ever created has been created in the last 18 months. So it just gives you a sense. And it's expected that the total data in existence will double again by 2028. So it's just, we are creating much more data than we ever have. As I mentioned, that data has to live somewhere. When we talk about the cloud, we sort of refer to it as if it's some, nebulous thing, but really it's a data center. These are buildings. And so as our personal and enterprise driven data storage needs grow, so does the need for data centers.
Yeah, yeah. And then when you take it back to the investor side, I mean, investors, especially investors at Second 50, they're looking for income, but they're also looking for growth as well. And so could you touch on why this kind of an investment makes sense for that?
Yeah, absolutely. I think what has us really excited about the opportunity set in data centers today is that we believe it presents an opportunity to invest behind some of the most exciting and, we would argue, important investment themes that exist in the market today between global digitization and artificial intelligence, but do so in a very risk managed way. Given that these data centers, which we own, are under long-term leases, I think 15 to 20 years, to some of the highest credit quality companies in the world, companies like Amazon, Microsoft, Google, Oracle, Meta. These are, on average, A-rated companies, government-like tenants, really. And so by having that strong credit quality kind of wrapping your long-term cash flow stream, there's a lot of confidence in the delivery of that long-term cash flow. There's contractual growth attached to that cash flow in the form of rent escalators. So by contract, the amount of rent that we earn as the landlord will grow every single year by 2 to 3%, which helps protect against inflation. And then lastly, when you think about the backdrop with, in the face of very significant demand for new assets as a result of increased needs around compute capacity, we're facing really limited supply in the form of limitations around things like land and power, which are two of the primary ingredients into data centers. So we believe that this supply demand imbalance that exists today will persist for for many years, and that will result in the growth of the value of those assets that do exist and are powered and in operation. So I think it does present this really nice risk balanced opportunity to invest into these really exciting areas, but do so in a way that generates strong cash flow and long-term growth as well.
Yeah, that's great. And I think obviously, I mean, it was hard to miss the news that came out in the last couple of weeks, but Blue Owl and the Meta deal. Can you touch on that? Because I think obviously every single big company is, especially on the real estate side, is aware of what an opportunity set this is. So, I
Yeah.
mean, to win a deal of that size is pretty impressive.
Well, thanks. And in case anyone did miss it, last week it was sort of formally announced that Blue Owl is partnering with Meta on the build and ultimately will own a data center campus that Meta has been working on already throughout the course of this year, and it'll be a $30 billion project when all is said and done. It's the largest known commercial real estate or infrastructure project that we've ever seen globally. So, to your point, it is of significant scale. It is an asset that we're really excited by, particularly given the importance of that asset to Meta. It will be the largest data center campus ever in existence, and Meta is on an AA- rated credit, so really really strong credit tenant, and they'll own 20% of the asset to our 80% ownership. It will be effectively under 20 years of lease term to Meta, though given the spend that they are putting into the asset themselves, we don't expect that they would ever leave the property, and will enjoy strong cash flow at a nice premium to Meta bonds, alongside some nice cash flow growth in an asset that is highly strategic to their long-term business. And to your point on sort of why they ended up deciding to work with Blue Owl on this, I think it really comes down to the scale of our capital, yes, but there are other firms that could bring to bear the amount of capital that we've brought here. It's really the scale of our solutions. We have within Blue Owl what we believe to be, the largest, or one of the largest, if not the largest, data center platform in the world. We are a leading partner to really all of the hyperscalers, and the scale and sort of range of our capabilities really separates us. We have, in-house development capabilities. If we have a tenant or a partner that is looking for sort of soup to nuts data center development, we can, help them with that. Everything from site selection to design to power procurement. We can, deliver all of that. We can be a capital partner alone if that is the need. We're happy to work with third-party developers if that is the need. So the range of what we can provide is really what led to the growth of our partnership with Meta here, and the sort of pre-existing trust, given that we already had a relationship with them with other assets.
Yeah, so it's great, and so that deal will be kind of part of this investment solution.
It will ultimately, yeah. That deal is structured to fund with the debt portion first, so you won't see it right away into this portfolio. You very well may see other Meta assets actually come in prior to this one, but you will see this in the portfolio, over the medium term, and we're really excited to be able to stock the ODIT portfolio with largely hyperscale tenants. Again, companies like Microsoft, Amazon, Meta, Oracle, certainly, and really a nearly 100% focus on IG companies. So really high credit quality overall.
Great. And then obviously data centers, as they continue to become more and more prominent, could you just touch on the environmental side and how, that's changing?
Yeah, I mean the technology is changing quite quickly, and as you can imagine, these hyperscale companies are highly focused on their ESG footprint. This is of high concern for them across all components of their business, and within their data center infrastructure footprint, it's no different. So it's been exciting to watch the market evolve in the last few years, and I think that there's plenty of room to run with increasingly sustainable technologies for these assets. There's full loop water systems now where there's less water waste, and you're seeing sort of similar types of efficiencies come in across other components of the sustainability of these assets. So it's definitely a focus for these tenants, and Blue Owl, I think, continues to prioritize what our customers prioritize. So certainly a focus for us to be able to deliver best in class design opportunities for them.
Right. And then, it's Blue Owl, I guess, until you started sponsoring players at Wimbledon, not many of our clients knew Blue Owl. Obviously, we know them as, a prominent world-class firm, but can you kind of talk to, we have investments across Blue Owl, we have some private credit, we have triple net lease, digital infrastructure. So there obviously a concern that comes up is, are we diversified being with, one firm? And we're incredibly comfortable with that because we wouldn't make the recommendation because we understand the makeup. But could you touch on that?
Sure. Yeah, I mean, as I think about what draws Blue Owl to the types of strategies that we invest in, right? What makes us prioritize some areas over others is we're really always looking for sort of three common themes across any type of asset class, and those three themes are first and foremost an attractive risk-adjusted return opportunity, and typically really strong current cash flow associated with that. The second piece is, we're always looking to identify strategies with large and growing addressable markets. We want to understand that this is a market where we can, deploy significant capital over a long period of time, very sustainable investment opportunity. And then thirdly, we like to be in markets where scale really matters, right? Where scale is an edge. That's not always the case in every market, but in the types of investment strategies where we focus, that is the case. And so I would argue that today, those three things are more true in the data center space than really anywhere else. And as a result, despite, we had sort of grown interest within our net lease business on the data center front. And as your clients have probably observed, it's become a piece of the portfolio within ORENT. We've just developed such strong conviction in the long-term demand drivers for these assets that we would like to have as much exposure as we can get, candidly, given the quality of these tenants and duration of the cash flow and supply demand imbalance that exists today. So we made an acquisition of what we believe to be a best-in-class data center manager that's been in this space since 2016, and really that's enabled us to build out the capabilities that we can provide to our customers, right, to the hyperscalers, and kind of described that already. But it's also broadened the set of investment opportunities that we can deliver for investors. So to the extent that, a client is interested in the theme, but thinks they're getting enough of it through the sort of ORENT lens, where we'll maintain, good sort of long-term diversification across real estate asset classes, then that may be suitable for some. For others who really share our enthusiasm about these long-term demand drivers, as I mentioned, we want to offer a pure play solution. And as you pointed out, with the deal sizes that we're seeing in the data center space, doing so will really enable us to capture some of these, world-class opportunities from our perspective. So, we think that there's room for both, and yet I think that we'll also have some clients that may prefer one over the other, and we're happy to be able to provide multiple solutions to fit different needs, and continue to execute in a sort of best in class way across these respective spaces.
Yeah, and I think also that's our job, to
Right.
decide how to allocate, because with the net lease strategy, you're getting great tax efficient income. And, if you want to be really income focused, that's the place to go. While digital infrastructure is going to give you a little less income, but potentially a little more appreciation. So it's great to have those options. So, Meghan, that's it. Thank you so much. That was really helpful, and congrats on Blue Owl's success.
Thanks
Keep
so
it
much,
going.
David. Yeah, we appreciate the partnership with Second 50, and to the extent we can be helpful for you and your clients.